Hey everyone, welcome back to the channel. It's Friday, March 27th, 2026, and stocks are down across the board this morning, extending the recent stretch of volatility tied to the ongoing Iran conflict and elevated oil prices. In the next 5 minutes, let's do a quick project update, where we are right now in late Q1 and what our systems are signaling for the rest of 2026. Right now, in late Q1, we're firmly in one of those classic below ATH grinds we've discussed extensively in the project. Markets spend 85 to 93% of trading days below all-time highs. That's where most consolidation, rotation, and volatility occur. This week's selling pressure has been driven by the Iran conflict, oil remaining elevated, and persistent inflation concerns. Today's down day continues that cautious tone, with broad weakness across major indexes as investors digest geopolitical risks and sticky price pressures. Looking ahead through our updated project lens, Q2 remains the highest caution zone. Our Hurst cycle updates and quad framework alignment point to increasing risk of a regime shift towards slower growth and persistent inflation. The new Fed chair transition, Kevin Warsh nomination, is still pending in the Senate, with confirmation possibly slipping into May or later. The core dilemma is unchanged. How aggressive can rate cuts be if inflation stays sticky from energy costs and supply disruptions? This setup continues to support our base case for a roughly 20% correction sometime after the new chair arrives, but before Q4 begins. It's not viewed as the end of the cycle, but a healthy reset amid policy uncertainty. Q3 continues the test phase. Stagflation-like conditions could peak here if growth slows while inflation lingers. Hurst cycles show building pressure from longer waves, with a potential trough later in the quarter. Sideways action or deeper dips are normal in these regimes. Iran resolution odds have improved modestly on recent diplomatic signals, but the conflict remains unresolved. Any de-escalation could ease oil and inflation pressures. Q4 offers recovery potential. If the mid-year correction materializes, Q4 often becomes the positioning phase for rebound as risks fade and earnings broaden. The project reminder stays consistent. Lock in gains on strength, stay diversified across sectors and geographies, and be patient during the grinds. Overall takeaway from today's project refresh: 2026 is transitional, resilient in stretches but vulnerable to geopolitical shocks and regime shifts. The real edge we've built together is risk management. Diversify, international, value, commodities, hedge volatility when it spikes, and respect big moves from highs rather than chasing every bounce. This kind of down day, followed by potential caution, is exactly why we focus on systems over emotion. What are you watching most right now? Iran developments, oil prices, or the Fed chair timeline? Drop your thoughts in the comments. If this project-style update helped, hit like, subscribe for more, and turn on notifications. Thanks for watching. Stay patient and keep exploring.